Something significant has happened in the DXY. Let me break it down for you guys in today's weekly Forex forecast. Welcome, I am FX Telepath, and we will get right into it here. So, looking at the daily time frame here of the DXY, last week, in last week's forecast, I was referring to this upward channel here. And we did have a decent peak above the channel here. It was very well respected, but this past week, we got a clean break of this channel. Obviously, a fake out is always possible, but since we broke this low here, in my opinion, it is definitely a weak sign. We are clearly out of this channel now on the DXY. So it is definitely a bearish event that has happened on the DXY, in my opinion. Now, a reminder on the weekly time frame, not only do we have a weekly demand that is in control from back here, we also have these dotted lines here, which represents a monthly area of demand. So I was kind of expecting the dollar to even rally up to 103. Now, that is definitely a bearish sign. However, we haven't really gotten a super clear direction in the dollar for quite some time. Going back to the daily chart here, I mean, we've pretty much, this was clear direction where we could be clearly preferring longs. But if you just look at this overall, pretty sideways price action, in my opinion. So we haven't really got a clear trend. I will say that if we break above this high here, we will have the ability to draw a very nice upward trend line that will be very sustainable, in my opinion. So this week, what we need to watch out for on the US dollar is very, very simple. This 1 hour downward trend line, in my opinion. So this 1 hour trend line is currently being respected. We do have this older demand zone. I've had this zone on my charts since October. It wasn't really an area of interest to me because it's such an old zone, right? You have to go all the way over here. But you can clearly see we are reacting off of it multiple times, once and then twice again. More importantly, we are pushing more up towards that 1 hour upward downward trend line. So this is the trend line that we'll be monitoring this week. If it continues to hold, we could expect basically that, hey, that daily trend line break, that's real, right? We're continuing to go down. If we do break this 1 hour trend line, that could definitely be a bullish sign, especially since we will have an upward trend here as well. So any break of this trend line is going to be a pretty bullish sign, but like I'm expecting is this 1 hour downward trend line to continue to hold here on the DXY. Moving on to the forecast for the Euro US dollar, you can see this purple box down below. This is not a demand zone as far as I see it, as far as my chain analysis. The demand zone was back here at 114. Now, we did react off of this, what I call support, and I was actually expecting to see a small reaction and then a pullback to the demand and then get the rally that we've seen here. It is still quite possible. It is proven to us that there is liquidity here and with the real demand sitting down below. So I still love a pullback entry down to this daily demand. I know people aren't trading the entire zone, like that's pretty big entry, right? It's a daily zone. Nobody really enters on the daily. So what we will be doing in this zone is looking for H1 confirmation. And what I mean by that is waiting for basically trend lines and opposing supply zones to be removed and then demand zones to be formed to look for longs. We will be doing that on a lower time frame once this daily demand gets hit, if it does. For now, pretty much a lot of sideways price action, but if we do start to turn around, I mean, we have a very, very clear liquidity point and profit margin on the Euro US dollar. So how do we go about and trade this pair right now? Well, on the 4 hour chart, we have a pretty clean upward 4 hour trend line. And the good thing about this trend line is, again, if you view it in the channel, and viewing things in the channel, it's something I've actually added. I'm not taking trades based off of, entering on the channel line or whatever. It's just, it gives a good representation of what we are seeing as far as the trend goes. And you can clearly see this channel is very well respected, right? And we're actually in the lower 50% half of the channel. So as long as this trend line's holding, it is a good time to look for longs, especially since we are at the lower end of this channel. Be aware of potential fake outs, right? Learn how to spot them usually when we see, some sort of wick like this or wick like that, that's usually some sort of fake out. Not always, but it's something to consider. But what I'm saying is, as long as the trend line's holding, it's longs all the way, especially on a 50-minute time frame or even a 5-minute time frame. And what I mean by that is, however you trade, whether you trade supply and demand, support and resistance, chart patterns, indicators, whatever, as long as this trend line's holding, it's going to be day trading longs all the way. And again, the most beneficial part about this is that we're not at the top end of the channel, right? If you look at this as the channel again, getting in long at the top end of the channel was never a good idea. Getting in long at the bottom end of the channel was a pretty good idea. So we're basically looking to repeat that here. Again, be careful for the trend line fake out. Might be good to have a stop somewhat below the trend line to potentially leave out fake out opportunities. On the 1 hour chart here, we caught a small move off of this 1 hour zone here. Nothing crazy, but it was a zone I was pointing out to the members in the daily market breakdown videos. We did get a decent move, but nothing really to write home about. Right now, we kind of have a traffic jam with two trend lines here, or bottleneck, whatever you want to call it. We have an upward trend line here, but we also created a downward trend line. So it's basically the battle of the trend lines right now. That's how I at least am viewing it. So it's a very, very tricky situation. I really don't know what to do based off of this situation. This bottleneck here doesn't actually happen too often. I think it happened last week on one of the other pairs, but it's actually something that I'm not too used to dealing with. So when I see this, it makes me very, very nervous. All I will say is obviously what makes a market is that everybody has a different opinion. And what I will say is if you are bullish on the euro, I would be more focused on that 4 hour upward trend line I was saying, which means longs are going to be preferred. If you're bullish as well, we could be waiting for this proven supply zone to be removed, and any demand zone there is going to be a very nice buying opportunity. The ultimate move would be a break of this downward trend line, a break of this supply, a break of that high with a clean demand zone there for a potential pullback entry. That would be a dream come true. You might not get all of it. We might only get the supply removed and the trend line removed, or just the trend line removed and the supply holding, right? We can't always ask for it all. So we have to be mindful of that. And again, if you're bullish, that's what I'd be doing. If you are bearish, as long as this new 1 hour downward trend line, let me just adjust it properly here. There we go. If you're bearish, as long as this 1 hour trend line's holding, we definitely could be looking for shorts on the 5-minute time frame. That's the time frame I would be doing it on. But if you view this as a channel, what do we notice here? We are sitting below the 50% mark of that channel. So I'd rather be doing that above this dash line here where you're above the 50% mark. That's where I would prefer to be looking for shorts here on the euro if you want to day trade short. So a little bit of a tricky situation based off of that 1 hour chart, but again, using our concept of multiple time frame analysis to determine what trend line is going to hold here, we could expect the 4 hour trend line to continue to hold, which means we could be blasting off to the upside, and that's where I'll be waiting for demand zones to be removing these supply zones. Moving on to the forecast for gold. So starting with a weekly time frame, we have just been on an absolute tear on gold. The issue with this weekly chart is none of this represents demand to me here. This is really the only demand zone. This is actually the only good one that I'm seeing. But I don't know if you guys can see on your screen, there's dotted lines here. That represents a monthly demand zone. So just a warning, guys, it wouldn't surprise me to see gold get a very deep pullback, something like this, before rallying out. So it's possible we do see gold, have a pretty negative start to the year. It's just a possibility. I'm just saying markets ebb and flow. Markets will pull back to macro demand zones, and it is a possibility. The good news is when we pull back on a macro view like this, it's going to take so long where everybody, oh, gold is the worst. And then once we hit our demand zones in the monthly and the weekly chart, that's when we want to be buying, when everybody's starting to sell gold. It's all about, market sentiment and understanding when everyone's scared of gold when it goes down here, that's when we want to be buying, guys. So that's kind of the concept that I apply. That's more for a long-term approach. Let's go to more of the trading approach. On the daily time frame here, it's really not a great chart. We are very sideways. We are ping-ponging between supply and demand right now. We are at an opposing daily supply. Nothing really that I am too concerned about. Could this be the supply that really, turns price around? It is definitely possible. There will be evidence on the lower time frame to suggest that's going to be happening. I'll show you guys that here in a minute. But on this daily chart, this daily supply is holding. It's not the best instrument to be trading right now, in my opinion. If we can remove this daily, the best situation is be removing this daily supply with a very strong area of demand, which would then act as our pullback swing trading opportunity on gold to get that next leg up. So with this daily supply in control and the fact that we prefer long entries because of the weekly trend, it is definitely a tricky situation right now. And this 1 hour chart, this is a great example of when not to trade. It all started last week in the daily market breakdown videos for the members. I saw this little supply zone. We were getting such a quick pullback, and I was thinking this is not a zone I'd like to trade at all. And then when this zone was formed, this is when I noticed, this is something I noticed, when we get really just whippy price action, like back and forth to zones, I wasn't surprised to see this zone blasted through and that zone. Well, we did get a small move off that zone, but all of these zones ended up failing. And I didn't take any one of these trades because of just how quick the return was to all the zones. There was really no, clear move away and stay away and then the pullback. It was just boom, 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 right? Just nothing really good, which is why I was telling members, this is when we don't want to trade, right? Look at this sideways price action. Nothing is going on here. There's really no aggressive moves away. There's no zones as far as how I do my chain analysis. So this is just a time where you want to, when you open a chart like this, you should be trained to think, I wouldn't be trading in this. And look, some people might have some sort of system where they do really well in a ranging market. It's not for me. I've tried. I always prefer when the markets are trending or at least have very, very clear zones, which we do not have here. So one thing I talk about a lot for the members in the membership is when not to trade, right? Everybody wants to know when to trade, which zone's good. And one important thing I like to talk about is when to not trade. And again, that is in the private membership. If you want to trade alongside myself and the members, join the Diamond membership, where you will have access to the 38-page supply and demand zone PDF, which will be your complete trading guide, the daily market breakdown videos, which are forecasts that I release every single night for the members to trade alongside myself, step-by-step video lessons A to Z covering everything you need to know on supply and demand trading, the Sunday strategy Zoom session where members submit homework, and it's an interactive 1-hour call where we go over all of your homework and every trading related question, private access to myself inside of our private Discord group where I answer all of your trading related questions, and finally the Sunday live stream forecast where we break down over 30 markets together. And it's not just me. Here are some of the members and some of their trades they've been taking lately, absolutely killing it. And we also have some amazing reviews from some of the past members sharing their experience within the group. So if you're ready to trade alongside myself and the community, join the Diamond membership today. Links in the description down below. So on the 4-hour chart view here, you can see this supply zone is in control. Kind of a hidden supply zone. Anybody who wants to say there's no supply there, you can go back and watch my forecast and see that we did predict that supply zone. It wasn't like some hindsight crap or anything like that. Any zone you see on my chart, I've had, before it was hit, just so you guys know, even the ones that fail, obviously. So this, there's nothing really to go off of here. Even if you view this as a channel just for getting along with this trend, I mean, it's really nothing crazy, right? We're sitting in the middle point here. It would make me kind of nervous getting along right now. What I would like to see, especially as a swing trader, I don't day trade. As a swing trader, I would like to see this supply removed, hopefully leaving us with a nice daily demand or a nice demand zone there on the 4-hour chart to get in long. That's what I would prefer to see on gold here. Until that, like if you want to wait for the lower end of this trend line to start to come in control, then we could start to look for longs on a 15-minute chart with the idea of, hey, we're going to get in day trading long with this trend line. But again, I would wait for a deeper push before doing that. But me as a swing trader, I want to see this supply removed. That's really all I'm seeing here on gold. There's just nothing really crazy or anything interesting going on right now. Moving on to the forecast for the S&P 500, we had this daily supply zone from last week, and it was removed as predicted. I thought maybe we could see a small move off of it, but we broke it pretty easily. And why was it removed? Was it removed because of these bullish green candles? Was it removed because we got a fake out below the trend line? Was it removed because it was a weak supply zone? Look, the reason this daily supply zone was removed is very, very simple in my opinion. The reason it was removed is because it was a daily supply zone within an overall weekly upward trend. We could have expected to see a small move off that daily zone, but really nothing crazy like a pullback all the way down to here. So in my opinion, that is why it was removed. We have very, very clear higher time frame forces that are in control on the S&P 500 right now. So in my opinion, that is why this daily supply was removed. And it was a pretty good supply zone as far as what it accomplished. It accomplished removing a very proven upward trend line, but it was clearly just some sort of fake out and manipulation to scare everybody. And now we are pushing back up. We have another test coming up, which is the potential removal of this all-time high. And again, I am expecting us to go to all-time highs. Obviously, at any point, yeah, this daily supply, we could actually get a huge pullback off of a daily supply zone. But based off of the fact that we have a weekly trend, I am never going to try to predict that on the S&P 500, which is why I am very, very always bullish on the S&P 500. Even in, crazy situations where the market's tanking, you got to remain bullish in my opinion. It doesn't mean you want to just be catching a falling knife, but based off of the higher time frame trends are always up. Unfortunately, we removed this daily supply and I don't have any demand zone here. That kind of sucks. I was really hoping we could get that, but the reality is it's something I've actually noticed this past year is we don't really get a lot of good higher time frame weekly and daily zones when we are at all-time highs. A great example of this is the S&P 500 chart, as well as gold. Gold has been very, very lacking for zones, at least as far as the daily and the weekly time frame goes, which is very, very unfortunate. Right now, as far as trading the S&P 500 goes, I didn't really know where to draw my trend line here. Very tricky situation. I have rules. I'm not going to go over them in here. I kind of wanted to draw that, but just really no clear trend line here based off of these weird wicks we have seen. But I will not deny the strength of this trend. It is very, very strong right now on the 1 hour chart. So if you want to just do a quick channel view here, give me 1 second. Quick channel view, just nothing crazy. It's a pretty nice upward trend line. So a nice channel. So as long as this channel is holding, it's really going to be longs all the way. I'm hoping we can break this channel to the downside. And why would I hope that? Well, because if you look down here, we had a very nice 4 hour downward trend line. That 4 hour downward trend line was removed by this demand zone, in my opinion. There is something here as well, but the issue was this kind of wick. And usually, a little fun tip for everybody, wicks, if you just do an arrow on the wick like that, it usually points to the real demand zone. Just a little bit of a fun trick for everybody there. So I'm hoping we get a pullback down this zone. Unfortunately, we had a good zone here, but unfortunately it was already tested when this was removed. Long story, but whatever. Not really a trading setup anymore. So I'm hoping we can get that pullback below 6,700, 6,600 to 6,648 down to this 4 hour demand zone, because I think it's a great dip buying opportunity. Not only did it remove the trend line, but it's just a great location for a zone as well. I don't like buying demand zones when they're at the top of old resistance and stuff. It makes me kind of nervous. So that would be a fantastic dip buying opportunity here. And look, if we push down to this demand zone and you absolutely need to trade at this zone, you could, but the only way I'd be doing it is looking for a 15-minute day trading confirmation. And I would be very aggressive with trade management, because I think we could only see a small move off the zone before seeing the bigger move off of the zone down below. So that's the zone I prefer on the S&P 500. And again, nice 1 hour trend line. So it's really longs all the way as we look to target the all-time high here on the S&P 500. Alrighty, on to the forecast for the USDJPY on the weekly time frame. These purple boxes, these represent support and resistance. I don't trade support and resistance. I trade supply and demand. If you don't know the difference, you guys need to watch my full course that's on YouTube here for free. It's the one that's an hour and a half long or whatever. It's got tons of views, tons of positive feedback. It should definitely clear it up for you. So make sure you guys go check that out. So this resistance area, we clearly are reacting off of it, which tells me we're going to be pushing up to target the liquidity that's above it now. That is just how I view it. You can disagree. That's fine. That's just how I view the market, and that's why I'm sharing it, because it seems to work for me. So I think now that we are reacting off of it, we will be pushing up and breaking that liquidity. I don't know when. It's kind of tricky to tell. The daily chart here, we clearly have broken the daily upward trend line, and I don't think this, to me, this doesn't really look like a fake out. The only issue with this trend line break is this trend line was very aggressive already, so it didn't surprise me to break it. And what I mean by aggressive is it's like the best trend line would be, you know, more of a bigger trend line. It seemed very, very aggressive, almost like momentum to me. But clearly breaking the trend line, it is a bearish sign. Not only did we break the trend line, but we have a very nice 4 hour downward trend line as well that was being respected. And ever since the trend line was created here, I was telling the members, look, it's shorts all the way with this downward trend line, but it's got to be on the day trading time frame. So that's what I was telling them, and it's a great time, right? If you view this in the channel, we are at the upper end of that channel, so it's really a great time to be looking for shorts on the day trading time frames, like on a 15-minute chart. And the good news is we could put our stop well above the channel for safe protection, or right above the trend line for safe protection. So it's a nice trend line. I like it, but if we break it and there's a demand zone there that's clean, I personally think it's going to be longs all the way, especially since looking at that daily chart, it could be that daily trend line fake out. It is possible. So it's not like if price says this, I'm just going to be waiting for the downward trend to continue. I'm probably going to be hopping on a long trade if the demand zone that breaks the trend line is clean. That's what we'll be waiting for. On the 1 hour chart here, we did get a reaction from the zone, but it was already tested, nothing crazy. Trend line here was removed by a demand zone down at 154.63. So if you're bullish, that would be our demand zone. The only issue with the zone is I don't like the size of this wick. It is really not my favorite situation. The zone itself, not bad as far as what it accomplished. It did break a trend line, so that is what we have going for it. So if you want to trade in long, I think looking for confirmation on a 5-minute chart, that's going to be preferred when we hit this demand zone, but it could be good for a set and forget as well. It is counter trend to the 4-hour chart though, so we got to be cautious of that. But again, it's a decent potential trade that removed a trend line. So that will be our potential buying opportunity. And if you're bearish, you're absolutely not going to be buying this zone. What you could be doing, you could just have the zone in your charts, wait for it to be removed, and then any supply that removes that, it's going to be a very powerful supply zone, in my opinion. So that is what I'd be doing here on the USDJPY. All right, moving on to the forecast for the GBPUSD on the daily time frame. Very, very clean trend line break of this downward daily trend line, and definitely no fake outs here. That is a very clean break. And what that's telling me is it looks like this weekly upward trend line is being respected as well. So it looks like it was just some sort of fake out below our already tested demand zone and seeing a nice push up now. So it's kind of bullish on the pound right now, especially considering we have a nice 4-hour trend line here as well. And if you guys are enjoying this video, make sure you hit that like button and always subscribe if you're new to the channel. I do these forecasts every single Saturday for free. And if you're not a member and you don't want to become a member, that's fine. If you want to support the channel, I just appreciate a like and maybe a comment saying, hey, Kev, love the video. I appreciate you. I always like to see some appreciation. And I appreciate every single one of you watching this video. As far as the 4-hour chart goes here, very, very clean upward trend line here on the 4-hour chart. We did come in contact with our 4-hour supply zone. And I'm not going to lie, I was pointing out this supply zone when we were like over here for a nice potential trading setup. But look at, like, it took so long to get back to this 4-hour zone, and it wasn't a great zone anyways because of this weird basing candle right after it. So it didn't surprise me that we kind of wicked right above it. But I've been telling the members, with the way the market's been going lately, kind of whippy, wider stop losses have been good. So for an example, on a supply zone like this, a wide stop loss like that wouldn't be a horrible idea based off of, again, patterns we've been noticing the last couple months with very big wicks like that seems to be happening a lot. So as far as trading the pound goes now, again, we have a 4-hour upper trend line. So our bias is certainly to the upside. The issue is if you look at this as a channel, we are sitting above that 50% mark. So I'd rather be doing that below this 50% mark somewhere down in this area. I think that would be much preferred, just based off of a buy low, sell high principle, right? That's kind of what we're going off of that channel. So I'd rather be doing it down there. And the good news is this supply has been pretty much proven to be supply. So if we break it, any demand zone there is going to be a nice potential trading setup. We will actually have a zone here, but we got to break it first. Unless we do base out here and create another zone there, which would be kind of ideal because this one's not the best. So it is longs all the way here on the British pound, and that's what I'd be waiting for. As a swing trader, I'm waiting for that supply to be removed. And as a day trader, you just want to wait for that below that 50% mark and continue to look for longs on the 15-minute time frame or the 5-minute time frame as well. On to the forecast for the USDCAD. This is where I am from. This is where I'm currently living and where I will most likely live for the rest of my life. So let me know where you guys are from in the comments down below. I always like to see where everybody is from. Now we have actually I didn't really notice this. We have a daily downward trend line, or daily downward trend. I'm not going to draw a trend line. I'm not going to explain why, but it is a daily downward trend as we clearly created a new low there. So it's a pretty bearish sign. Definitely overextended here, but that doesn't really mean anything. But typically when we are overextended, we will get some sort of bounce to the upside. What we have going for us here on the weekly chart is actually this weekly trend line is being respected. You can see the weekly trend line is actually drawn from here to here. This is a reaction and respect of our trend line. I know we did break below it, but just based off my rules, I'm not calling that removed. So as we approach this trend line again, it's definitely possible we do maybe see some bullish price action here. It's not something I'm just going to predict is going to happen. We will have to start to watch out for signs. I'm going to ignore the 1-hour chart here because in my opinion, the 4-hour time frame is just so much more clean. Now, this was a bummer situation where we had two very good 4-hour zones, and this one blasted right through, and this one we only got a small risk reward on that one. So kind of unfortunate. I was hoping for a bigger move, but you can't always get what you get. Or sorry, you can't always get what you want, right? That's like the #1 rule when you grow up. So as far as this 4-hour chart goes, we have a nice 4-hour downward trend line. As long as this trend line's holding, 15-minute time frame shorts are good, but we got to be cautious. We are very overextended, right? Like I was saying, trading in short like that just seems like you're kind of chasing right now. So waiting for a pullback might be best. And not only that, we are actually below this channel. So we'll have to see if it's a fake out or not below the channel. It seems like it might be. And again, I'd rather be looking for shorts in that over that 50% mark. That is just what I'd rather be doing. The best situation would be to wait for either one of these 4-hour supply zones to be hit. So that would be our first supply zone for a potential short trade at 1.39. And the better supply zone is actually sitting above at 1.40. I've been pointing this one out for a while, didn't get the pullback, just missed it. But the good thing is we have liquidity now potentially before it. So this would be our first stab at a potential short trade. I like the zone. It is a nice drop, base, rally with a very good move away. It's about as good as it's going to get. If we break that zone, that's fine. I would like to see a reaction off of this support. Pull back up to that 4-hour supply could be good for a short trade as well. If you are bullish and you say, Kevin, this is just a big fake out, we're gonna go all the way up in the USDCAD. If that is what you think, I'll show you exactly what I'd be doing right now. I would just simply be waiting for either a break of the trend line. If there's a demand zone there, that would be our potential long trade. It's possible we break the trend line and the supply zone at the same time and create a demand zone. It's possible that we break the trend line, there's no demand, but then we break the supply and there's a demand zone there, and then we could look for longs. So for longs, if you're bullish, we need to wait for the trend line or these supply zones to be removed, hopefully leaving us with high quality demand zones like we have here for these supply zones. And again, if you're bearish, watch the downward trend line on the 4-hour chart, day trading shorts all the way with that trend line, pullbacks up to these supply zones, going to be fantastic as well if you are bearish on the USDCAD. Moving on to the forecast for the AUDUSD. And if you guys haven't checked out my Stoic Trading Psychology podcast, make sure you guys check that out, because if you don't have the psychology aspect of your trading down, it's going to be very, very difficult. That is why I started creating the podcast. It's kind of just for fun. I didn't really want to continue to do it, but I got a lot of positive feedback. So make sure you check it out anywhere you get your podcast, as well as on YouTube, the Stoic Trading Psychology podcast. As far as the daily chart goes here on the Aussie US dollar, very clean break of this downward trend line. It did create a daily demand zone, and this is actually an older zone we had on our charts. You can go back and confirm that. Beautiful move off of that daily zone. Again, you can go back, you can confirm it by watching my past forecasts back from in September and August. Clean break. We did create another daily demand zone, but I don't love when it's a reaction off of another zone. But it could be an area we see a potential move off of on the Aussie. So really no clear direction here. Obviously, yeah, momentum is blatantly up. The direction is up. But I prefer when we have a trend. That to me is more of a sustainable direction, if that makes more sense. The good news is we have nice trends to the upside, but the bad news is we don't really have any new zones. Unfortunately, we're kind of all worked out here on the Aussie US dollar, because it's been fantastic. I mean, we caught this supply zone trade right here, and then we caught this demand zone trade from back here. And again, all of this you can go back and confirm on my YouTube videos, which can't be edited after the fact, so you know it's real. And then this supply zone, that was a bummer, but it is what it is. And I did not catch all of this move, just so you guys, I'm trying to keep it realistic here. But look at this momentum, right? It's very, very strong. But to me, this is not sustainable momentum. We need clear pullbacks to create very clear trends. And until that happens, I just simply wouldn't be trading the Aussie. It's just, yeah, obviously getting in hindsight, this would be a great time to get in long. But I'm not going to be getting in long up here. It's just too risky for me. I spotted this demand zone down below. It is not bad. I was preferring to see a pullback quicker rather than later. We're not getting that. A pullback to the zone now would make me kind of nervous. It's kind of old, and it's not really a zone that stands out to me, right? It's not like these two zones from back here. That was great. And then this zone that we got, look at that move away. It's fantastic. This zone over here, it's just kind of mid. It just barely qualifies. So if we do pull back to it, I would like to see basing out before, creating liquidity, then get a pullback to the zone. That's what I prefer to see if we do get a pullback. And then again, to be clear, it's just way too much upward momentum for me. I want to see a clear trend. So until we can get a break up, move to the downside that's deep enough to create a trend line, I'm not going to be getting in long, and I wouldn't be either. It's just kind of chasing, and that's just how I feel. I don't see any zones, no clean pullback. So at this point, if anything, it is longs all the way with the 1 hour trend and everything, but it would still make me nervous. I would rather just be waiting for that trend to continue or pullbacks to demand. All right, looking at the USD Swiss, we got a fake out below this trend line, very clear fake out, push back up, no supply up here, but whenever we're kind of at the highs, to see a move to the downside is not really too surprising to me, which is why I was telling members, you guys got to be careful getting in long up there at that high. It's really that simple. As far as a 4-hour chart goes here, there's really not a lot going on. We had a demand zone here that was removed after getting a small move off of it. The supplies and above is tested, so nothing really there for shorts. But as far as trading it goes, I don't mind a pullback down to this demand zone at 0.79. What I like about it is we kind of created some sort of liquidity here. Let me just get my drawing tool out. Something like this to me is starting to look like some sort of support. So I'd like to see another reaction off of it. Then I think the zone becomes even higher odds at 0.799. Or sorry, 0.797. So that is really the nearest pullback entry that I'm seeing for potential longs. Again, this is not a short trade. So I'm not really seeing any shorting opportunities. But if let's say we break this supply, any demand there is going to be a nice trading setup as well. If we do push back down to this 4-hour demand zone down below, I think it's very good as well at 0.789. So at this point, we kind of got to be a little bit patient and wait for zones to be hit. And then trade accordingly, right? And again, if we push up, break the supply, any demand there is going to be a nice trading opportunity. If you want to get more aggressive with longs, we have a pretty decent zone. It's not my favorite zone, but look, if you look here, downward trend line was being respected and it broke very, very cleanly. That trend line was broke by this demand zone. But if we zoom in, what I don't like about this demand zone is if you notice here, look at this wick. I just don't love that. Not my favorite situation. It's just not very, very clean. So any long off of this zone, I'd be doing kind of a wider stop here, maybe looking for like a 1-to-1 trade, maybe a 1.5, maybe a 2-to-1, depending on how wide your stop loss is, right? It's not a bad zone. The move away is I would say is decent. More importantly, remove the trend line. That's why it's not bad. So that would be our pullback long entry, but I would be more aggressive with trade management on that trade because we do have a daily trend to the upside. So that's kind of giving us direction. So I guess based off of that, you can look for a bigger risk to reward trade here. The only issue is the zone itself isn't really that fantastic. It's not like it has the best move away. So that's why I would be more aggressive with trade management off of those zones. And then if we pull back to the 4-hour zones, I think with these ones, we can be a little bit less aggressive with trade management and look for, bigger moves to the upside on the USD Swiss. All right, moving on to crude oil. And if you guys are not following me on Instagram, check me out at FX Telepath. I like to post stories and the odd posts every now and then. So check it out. It's also a good way to message me if you want to just say hello or whatever. On a weekly time frame, we have a weekly support down below. Got that reaction off of it, and it is liquidity now. So I think we will be breaking to the downside at 53.85. It's hard to predict that based off the fact that we're at the lows and we could see the price push up. But my hunch is telling me we will be breaking and targeting that liquidity and targeting this weekly demand zone. It's a great rally-based rally as well. So I think it could be used to push price up on oil. So I am bearish oil until we hit this weekly demand, and then I'm absolutely bullish as we hit that demand zone. So that's kind of my long-term outlook on crude oil. And as far as the daily time frame goes, we have a nice daily downward trend line that is being respected. If we view this in channel mode here, you can clearly see we are above that 50% mark of the channel. So I think shorts are a fantastic option right now, which is why I was pointing out to the members this 1-hour area of supply back here. You can see it is an older zone, but we've gotten the resistance was created here, and we got 2 beautiful reactions off of this resistance. Got to pull back to the supply zone right now. The trade is currently playing out. I would like to see a move to the downside, hoping we can. That'd be fantastic. If not, whatever. Pretty much means that the higher time frame trend might be changing. So it's kind of a big shift. But it's a great supply zone, great move away. The limit order has already been triggered if you did take the setup and if you're bearish. If you're a day trader, come Monday morning, as long as this supply zone's holding, we could definitely be looking for shorts on a 5-minute time frame. which means we're basically going to be waiting for supply zones to be formed on the 5-minute time frame and looking for shorts within this 1 hour supply zone. And if you're day trading short, you could easily target the trend line. So this trade currently playing out. We'll see what happens. If it breaks, there might be a good demand zone down here for potential long trade to maybe catch the change of direction here on crude oil. But for now, that is really the only supply zone that I've seen right now, but the trade's kind of already played out. If you are bullish as well, like you think, okay, absolutely not, Kevin, this is the change of oil. If you're bullish, I just want to show you, if you're bullish, you're basically saying that this beautiful daily downward trend line is going to change, which is fine if you want to predict that. It's just kind of a bold prediction. And we do have one thing going for that prediction, though, and that is the fact that we not only broke this 4 hour downward trend line, and then as we did that, we created a 4 hour upward trend line. So what I will say is, as long as this trend line's holding, 15-minute time frame longs are going to be good. Pullbacks down to this 4 hour demand at 58.82 could be decent as well. We've just seen such a close reaction to it that I would rather be looking for a 15-minute or 5-minute confirmation inside of this 4 hour zone if we do pull back to it. All right, so over to Bitcoin here. I did not have this weekly supply on my charts, but after looking at the charts again, I decided to add it. So kind of a clear direction if price goes up, and we have a clear direction down to this weekly demand as well if we continue to go down. I do personally think we could be seeing a deeper pullback here on Bitcoin to target this weekly demand, which is going to be a great buying opportunity for two reasons. It's a good demand zone. The supply and demand will typically act as magnets for price, and we have a clear area of resistance here, or sorry, support, which could act as liquidity. So as we're sitting in the middle of supply and demand, how do we tell the direction of where price is going to be going? Well, on the daily time frame, you can see we have a very, very clean daily downward trend line channel view here. You can clearly see we are pretty much floating right in the 50% mark of that channel. So I personally think shorts are preferred here on Bitcoin, but any long trades could be good as well, because this could have just been some sort of fake out to the upside. And I'm not one to say, oh, we only can be trading with a trend, or we don't want to be trading counter trend. My biggest tip for that is, if you're going to trade with the trend, you can be less aggressive with trade management. If you're going to trade counter trend, so any long trade right now with this daily downward trend is counter trend, you want to be more aggressive with trade management, which is why this 4 hour demand zone here, I would be more aggressive with trade management. And this 4 hour demand zone actually removed a opposing 4 hour supply zone right there. Beautiful move off that supply. This was called out in last week's weekly Forex forecast. That's why you guys should probably hit that subscribe button, right? Beautiful move off that supply. We created this demand zone that removed that supply now. So it's a nice zone. It's as good as it's going to get. The basing's pretty clean. It could be cleaner, but it's pretty clean. The move away is what I really love. It is absolutely fantastic. Not only is it a great initial move away, we stayed away very much as well. So I think it's a great pullback entry for a long trade. I would look for a 1-to-1, 2-to-1 trade here max, based off of the fact that I think we will be pulling back down to that weekly zone. And you could get lucky, right? Price could hit our zone. You could take your stop, move it to break even. We get a bigger pullback here, move your stop here, trying to lock in a 1-to-1, and then price just can keep going, right? And just keep it up, right? You might get a huge trade here, but we have to be mindful of the higher time frames, and I'd be more aggressive trade management here, whether it's just looking to take profit at 1-to-1, 2-to-1, or moving your stop to break even whenever you can. So that will be our pullback entry for a long trade. And if you are bearish, I also pointed out this supply zone from last week as well, right over here at 94,764. I actually was saying it is the better zone as far as liquidity goes. I did like the move away better on this one, but they're actually both very, very similar. So the bigger trade, I think, could happen at this supply zone to see a move like that. So if you're bearish, that would be our supply zone short. And if you're bullish, that will be our demand zone for longs. And again, I'd be less aggressive with trade management at the supply and more aggressive with trade management at demand. If you guys want access to my full-length forecast, join the Diamond membership, where you will have access to that, as well as my daily market forecast, the full course supply and demand PDF, and much, much more. Make sure you guys subscribe so you can catch next week's forecast as well. And I always appreciate a like. Thank you guys, and I'll see you in the next video.